Before the end of this video, you will know the right investment to pick. Because I know a lot of Nigerians, the reason why they have not invested is because they hear too many investment options and they are confused. They are thinking, should I do shares? Should I do mutual funds? Should I do bonds? Should I do treasury bills? Is it real estate? Should I start my own business? You are too confused. And before the end of this video, you gain the clarity that you seek. Hi everyone, my name is Favour and welcome to Money Talk with Favour. Before the end of this video, I'll provide you the clarity that you need to choose your right investment based on the capital that you have, based on your risk appetite, and based on your financial goals. If you have been following this channel, I've told you that you need a financial goal before you start to think about investment, because what will fuel your investment journey is the goals that you have. But if you don't have yet, don't worry, stick around. And before the end of this video, I hope you will have one. Let me start by explaining to you what investment is. Investment is simply growing your money, making money work for you without so much effort. So imagine you put 100,000 naira in your wardrobe and you go back there next year, 2027, you will still have that 100,000 naira there. But imagine you take that 100,000 naira and invest it. Probably you have maybe 100,000 and 20,000 naira. That 20,000 naira, it's not that you did a lot of things to get it. The only thing you did was that you invested. So that is what investment is. And I will not end this video without telling you the types of investment that you have. Because for you to make that decision to choose investment, that means you must know the types that exist. Am I right? So number 1 is stocks. Number 2, bonds. 3, mutual funds. 4, real estate. 5, business investment, and we have a lot, maybe treasury bills and all of that, index, ETFs. But in this video, I'll be explaining 5 just in a basic way that I know you will understand. First one I would like to explain is stock. So when we hear stock means that you're owning a piece of a company. What do I mean by a piece of a company? You are buying a certain percentage of the ownership of the company. For instance, you can buy like 50,000 naira worth of stocks of GTCO. You can buy 5,000 naira. So that means you have a small proportion in GTCO. So what happens is, if the profit of GTCO increases, your money also will increase. And GTCO pays dividends once in a year or twice, interim dividend, and I know that will help. It's like a source of income to you. And number 2 is bonds. When you hear bonds, what should come to your mind is that bonds is a debt instrument. What do I mean by debt instrument? You are borrowing the government your money, or you are borrowing a big company your money. So that is what bond is about. And one thing I need you to know about bond is that it has low interest. So if you know you don't have any risks, you don't have the capacity to bear any risks, you can go for bonds. The third one I will explain is mutual funds. And when you hear mutual funds is where a financial advisor pull your money together in a basket, maybe shares, that's bonds, that's treasury bill. There's a lot of investment portfolio in that basket, and you can now buy a certain percentage of the basket. And if you're starting out with investment, this is advisable. Why? Because you might not know the right shares to buy, you might not know the right bonds, you might not know the right investment to go into. So buying mutual funds is just like buying a piece of the hard work of a financial planner, and that is what mutual fund is about. A lot of people tend to say, hey, mutual fund is risky, but I'll say it has low or medium risk, because you are not doing hard work and you will get a return at the end of the journey. Because wait, when you buy shares, you are buying the risks of one company. That is, if the profit of the company falls, all your money will fall. But imagine buying shares of different companies with just 5,000 naira. So if a company's profit is increasing and another one is reducing, the risk level will be managed like that. And I don't know if you understand well. It will help reduce your risk, right? So that means it has low or medium risk, so it's still safe, and it's the best recommendation if you're starting out with your investment. The next one I like to explain, and a lot of people have heard about, is real estate. And when you hear real estate, you know that it has to do with house or land. So real estate means you buying land or properties with the intention of renting out maybe the property, the land or the houses. You want to rent it out, or you want to sell it after a long period of time. So that is real estate. The last one I'll be explaining in this video is business investment. Virtually everybody knows what a business is, but when we talk about business investment, it is in two ways. Either you're starting up your business or you're investing in the business of another person. Maybe your friend is starting out a business and you know that your friend's idea is good and might likely make profit. You can invest your money and says, when you start making profit, I'll get this return, this percentage in return. So that is business investment. And let me talk about how to now choose the right investment for you based on the three things that I stated earlier. Number one, your capital. So you have to look at the capital. What do you have? What amount do you have? So before you make this investment decision, please, I would like you to go and watch my video before you invest a single naira. Go and watch it, because that will really help you to know the things you should have done before you start thinking that I want to invest. I hope you get that point. So now you have to look at your capital. How much do you have? How much can you invest consistently? When I talk about investment, I would like to emphasize consistency. Investment is not a one-off thing. It's not what you do when you are really motivated. I want to invest. No, it is a sacrifice that you need to pay, and you need to do it consistently. So investment is more like building an habit of investment. So you have to look at yourself. How much can you spare maybe every month to invest? That will give you an idea of the investment that you pick. Now let me analyze it. If you have between 5,000 naira to 10,000 naira to be investing monthly, I would like to recommend mutual funds or shares for you. And shares, know that shares is very risky. I'll talk about that later. But if you have 5,000 naira, 10,000 naira every month, think mutual funds, think shares, or think fixed income. When I talk about fixed income, it's like putting your money in a interest paying platform, maybe like OPay, PalmPay. Fix it there and they're giving you interest. So think that way. When you have between 50,000 naira to 100,000, when you have 100,000, let me start from the biggest amount. You can start to think of bonds, because for you to invest in bonds, you need like 100,000 naira to start investment. And if you have 50,000 naira, you can think shares. That is, you have a larger money, to diversify, buy different type of shares, so that if one is not performing well, the other will perform well. If you have 100,000 to 500,000, you can start to think of a business idea. Get an idea. And let me chip this in. When you want to invest in a business, don't think of what you like. I like to do this, I like to sew, and your whole street is full of fashion designers and you like to sew. When you think about business, think about it in a way of solving the problem of people, solving your customers' problem, your intended customers' problem. So that is what you should have. Do something that will sell, so that you don't end up losing your money. Okay, so if you have 500,000 to millions, you can also take real estate, because real estate requires a lot of capital to start. The second thing I would like to talk about under choosing the right investment is your risk appetite. See, know your risk appetite. If you don't know your risk appetite, I don't know, it's your risk appetite that will help you to know how much risk can I bear. So if you let's use an analogy, an example. You imagine you invest 200,000 and in the next 24 hours you see that your money has dipped, that it has reduced to 150,000 naira. What will you do? Will you panic and remove all your money? If you panic and remove all your money, you're a low risk taker. Stick to bonds, stick to treasury bills, because they have low risk, but know that they will give you low returns. Okay, so if you feel I'm scared of what will happen, this and this and this, but you do not remove your money, you're a medium risk taker. So you can do shares, You can use fixed income with a reliable bank app and all of that. You are a medium risk taker. Of course, you can take risks a little bit, but if you look at it and say, it's just 50,000 naira, that is the market. The market is volatile. This and this and that. You are a high risk taker. You do not panic at all. You are a high risk taker, so you can tend to take more risks. So let me try and break down all the type of investment that I mentioned. I would like to break it down into their risk level. So when we talk about shares has high and medium risks. So it can be very risky. That is, you can lose your money if the business is not doing well. It can really dip and it can also increase. So that is shares. Shares is very volatile. To be coming up and down like this. It can be stable. So shares, it has high risk and medium risk depending on the type of business they're investing into. And bonds, it has low risk. When we talk about mutual funds has between low and medium risk, so it's still safe. When we talk about real estate has high and medium risk because there's a lot of risk involved in real estate. So yeah, high and medium risk. And when we talk about business investment, it has a very high risk. High risk because the business can fail, and when the business fails, you might end up losing your money. So with that analogy, you can link it to your risk appetite and know the best type of investment to go for. So the last one I would like to talk about is your financial goal. So you can choose the type of investment to go into based on your financial goal. And your financial goal can be broken down into short term, medium term and long term. So when you are talking short term, it can be between a year and two. When you're talking medium, it can be between 3 years to 5 years. And when you're talking long term, it should be between 5 years and above, right? Maybe 5 to 10 years. So you should have a financial goal. You should have this goal in mind. What is fueling your investment decision? Maybe short-term goal I want to save to buy a laptop. Can be invested. I don't know if you can invest for that. But when you're taking long term, you want to save for your children's education. So that can be long term. So I hope this has helped you, and I know that by this time you're already thinking of the right investment to go into. And in my next video, I'll be showing you a step-to-step guide on how to invest in all these type of investments. So we'll start with shares, then we'll go on with bonds, with mutual funds.